Good afternoon. Our presentation today is examine the implication of introducing a central bank digital currency in a developing economy. Today, I have with me Dr. Elliott, Dr. Brown, Dr. Dame, and Ms. Miller as one of of our presenters. We're going to also look at our abstract shows that the when examined the implication of introducing a central bank digital currency in a developing economy, we used data from 2014 to 2019 from XRP Coin Market Cap published on the Yahoo and International Monetary Access to Microeconomic and Financial Data on Gross Domestic Product of South Africa. We also use the t-test, ANOVA, and scatterplot to look at cryptocurrency in South African context. Dr. Brown.
The growing popularity of cryptocurrency in developing economies has governments considering state-managed digital currency. And with that said, the reason why we chose South Africa is because it was one of the top 5 countries with 16% respondents confirmed they use cryptocurrency. This was referenced by Bulge Polls 2019. Also, it is also that country is also has the highest adoption rate of cryptocurrency by consumers, also by Bulge Polls 2019. It is also a developing economy using cryptocurrency with data available, and it is also considering adopting a central bank digital currency. Dr. Elliott?
Yes, so the literature review begins with discussing the function of cryptocurrency in a developing economy. Central banks are attempting pilot programs on how it would operate. According to Dow 2019, Kai Narang, and Humphrey 2019. Of 63 central banks, 70% said they had researched the viability of issuing some form of electronic currency, according to Leinonen 2019. XRP is one of the more widely used in South Africa to make payments locally and globally, according to Crossman 2019. Currency is based on trust, with the state recognizing it as a legal tender, able to fulfill contractual obligations, and as a claim against central bank, according to Fonseca 2019. Why is there a high rate of adoption of cryptocurrency by consumers in South Africa? Number one, it's easier to avoid currency volatility risk, according to Crossman 2019. It's easy to move money in an open, decentralized platform, according to Del Castillo 2018 and Guzman 2018. It is an alternative to SWIFT wire transfers, becoming an imminent competitor, according to Del Castillo 2018 and Guzman 2018. The existence of a financial technology unit that is recognizing the emergence of a digital movement of money exists, according to Dzonzi 2018 and Mbatha et al. 2018. The price or exchange rate is only influenced by the market. That is, demand for the currency has no related cost and cannot be interfered with. Lukasiewicz, Kaminska, 2019. Continued, all persons receive equal treatment to access the circulation and exchange of digital currency. So it supports financial inclusion, according to Lukasiewicz, Kaminska 2015 and Leinonen 2019. Surveys show younger adults use more cash substitutes than older adults, according to Kai Narang and Humphrey 2019. South Africa population has grown to more than 58 million people, with approximately 21% under the age of 15 years, according to Maluleke 2019. And so now Ms. Daniel Miller will continue.
We also looked at what are the implications for introducing a central bank digital currency in a developing economy. Lean in 2019 suggests a central bank digital currency would cause a narrow bank system or payment-only institution service. Virtual currencies are gaining in popularity despite not being legitimized by a third party, such as an insured depository or state-regulated bank, and due to occurrences of cybercrimes such as cyber laundering, according to Miller 2019. Central banks requiring payee information for account-based transactions would eliminate the advantage of anonymity, according to Finasca 2019. What do users want in central bank digital currencies based on the current features of XRP? 1. Stability and security in the transfer of value without the use of a trusted third party, according to Maliku and Bot 2018 and Finasca 2019. The transaction of safety and stable exchange rate benefits, according to Lukowitz, Kaminska 2015, compatible with secure software PCs, tablets, and mobile phones to access their digital currency, according to Leonin 2019, to be able to make payments and maintain its value, according to Finasca 2019, a convertible in the future to other formats of currency at a comparable value, according to Leonin 2019. In continuing, the central bank digital currency should also include a user interface, access to transaction history, confirmation of specific payments, and able to accommodate a variety of payment situations and users, according to Leonin 2019. Trust in the usability of a currency and its acceptance by a legal person confirming a claim on the issuer, according to Finasca 2019 and Leonin 2019. A system such as blockchain to secure the process supporting trust among users and allow a currency based on neutral technology, not social agreement. And finally, anonymity, independence from a state, bank, or central organization and unaffected by crisis, wars, politics, or inflation, according to Lukowitz, Kaminska 2015, and Mancini Grilify 2019.
In our methodology, we use the t-test, ANOVA, and scatterplot, and we also look at data from 2014 to 2019 to compare two groups of data, XRP and volume, GDP, and cash in use. Keanarang and Humphreys 2019 suggest that calculating currency in circulation is as a ratio to gross domestic product determines the actual cash in use. The test was used to determine whether there is a significant difference between the means of two groups. We also look at three research questions. One, is there a statistical significant relationship between XRP volume and GDP? And our second research question, we also look at and to see if there is a statistical significant relation between XRP volume and cash in use. Our third research question, we looked at to see if there is no statistical significant relationship between cash in circulation and cash in use. Dr. Dames.
According to the t-test, for the results for the questions, as Dr. Williams just stated, question 1, is there a statistical significant relationship between crypto volume and GDP? The answer was, there is a significant negative relationship between crypto volumes and GDP, as well as crypto volumes and currency in circulation. For question 2, there is no statistically significant relationship between currency in circulation and cash in use. The solution, the results are as follows. There is a significant positive relationship between the currency in circulation and cash in use. Question number 3, is there a statistically significant relationship between crypto volumes and cash in use? The results indicated that there is a significant positive relationship between crypto volumes and cash in use. The results for the ANOVA and scatter plots are as follows. There is a negative correlation between crypto volumes and cash in use. There is a direct positive linear correlation between crypto volumes and currency in circulation. And between 2014 and 2019, the p-values showed a significant relationship between variables, except for the periods between 2017 and 2018, where there was no significant relationship between variables. There was a significant increase in crypto volumes from 1.4 million to 285 million during the same period.
In conclusion, the study yielded an implication that the adoption of cryptocurrency has an influence on a developing economy as indicated by GDP and cash in use. The relationship between XRP volume to GDP and to cash in use is statistically significant. The relationship between XRP volume and cash in use has a linear negative correlation. Consistent with the literature, as the more consumers adopt digital currency, the more and frequent are transactions and the less cash they use.